welcome back to another video here on Financial Friends. Today we are going to be having another episode of the dividend journey. We're going to be unpacking earnings, unpacking dividend increases, unpacking the market as it's been recently, which has been crazy. So if you're excited for any of that stuff, you want to learn about dividends, you want to watch a portfolio grow, stick around, watch this video. And go ahead and hit that like button down below real quick before the video starts. That way you're able to help push this video to more people, and I really do appreciate the support. So without further ado, we're going to touch on all three of those things: the market, earnings, and dividend increases, and how I love them and how they help compound your portfolio. So obviously we've all been in the market recently, finished up today, was down over the week 2.15%, and down over the last month about 5.33%. Now, the reason I've said the market and I'm choosing to select the Dow Jones as kind of my index of choice for this is because obviously we have a dividend portfolio with companies like 3M, Waste Management, Apple, Johnson & Johnson, these big blue chips that their movement is a little bit more correlated to how the Dow Jones moves rather than like something like the S&P or the NASDAQ. So I selected the Dow Jones for that, but it has not been a fantastic last month, fantastic last 6 months, or year to date, it's been terrible. But nonetheless, we continue to buy new stocks. Now, you can see the portfolio here, but before I went ahead and filmed this video, or started filming this video rather, this was what the portfolio looked like. So I did make some adjustments. You can see that annual income is up $1.36, and yield on cost and dividend yield did stay the same. But if you want to go ahead, pause the video, take a look at these annual income marks or the amount of shares that I had prior to the addition here. And then you can see I'm up to $15.36 in annual income, and all of these positions had grown a little bit. We did make some pretty big additions. However, the portfolio got smashed over the last couple of days, so the value didn't really increase too much. Now, I did want to update you on some earnings. We had some earnings for both 3M and Waste Management. So both of them beat. 3M beat pretty substantially. They reported $2.65 per share versus an estimate of $2.33 per share. Waste Management beat as well. I'm not sure what they were expected to have here, but they reported an adjusted EPS of $1.29 and then reported $1.23. So two good beats there, two businesses that I'm just not worried about. We do have supply chain issues. We do have maybe a decrease in consumption as we move forward. That would literally directly impact Waste Management. And I mean consumption like actual consumption of like items and goods that people then have to throw away, and so Waste Management business kind of goes down. But people will continue to buy products from 3M. Businesses will continue to buy products from 3M, although they might not see the same clip that they're used to seeing. They did also see some decreases year over year. Again, I'm not super worried about those things. We were rolling right in Q2 2021. Earnings and things like that were pretty good. People had a lot of money. The economy was starting to open up again. People were excited. And so we're now comparing back to that Q1. I'm not super worried about it. Waste Management, same deal here. We might not see as much growth as we continue to see a decrease in consumption as inflation continues to rise. But again, I'm not super worried about it. Apple did report pretty good earnings, and just like the rest of the market, they fell the next day. So hopefully over this week, I'll be able to pick up some more shares of all of these companies at discounts. Again, the last 5 days has not been good for the market, so everything is at a discount. Apple, however, continued to show why they are one of the best companies out there. They beat on EPS. They beat on revenue. They beat on iPhone revenue. They beat on service revenue. They didn't beat in the other products or the iPad category. I shouldn't say they didn't beat. They did beat in revenue on the iPad category, but they were down year over year. Some supply chain issues there. Tim Cook noting we are not immune to these supply chain issues. So I think that's a little bit of the hesitancy that people have maybe jumping in on Apple right now, expecting those Q2 numbers to not be as good. Maybe this is a little bit of a soft or a silent warning, like, hey, just so you know, we're not flawless all of the time. However, they are also going to see some China affected, or their business in China affected a little bit with the shutdowns happening there. Those numbers not put into Q1, they will be put into Q2. And so again, some of these figures here might be decreased just a little bit. However, some positive news for stock price is going to be this $90 billion buyback. It's also going to be good for your kind of slice of the ownership, at least for now. Going to see that ownership increase. And kind of the main topic of this video, the dividend increased by 5%. I just got a 5% raise, albeit it's not on too much money. We're getting 32 cents per year from Apple, so I saw a 5% raise on 32 cents. But Johnson & Johnson, after a pretty good Q1, announced a 6.6% dividend increase, bringing the per share income from $1.06 to $1.13. Obviously, this company is going to continue to do this pretty much into oblivion. I don't think they're ever going to stop. This is their 60th consecutive year with a quarterly dividend increase. I'm sorry. The quarterly dividend increased for the 60th consecutive year, not 60 consecutive quarter increases. However, the dividend increase nonetheless, a 6.6% increase, which is fantastic, bringing up our annual income on Johnson & Johnson. Now, again, this is an increase on $1.48 per year, but the principle still stands. These are companies that are continuing to increase their dividends. Dividend kings or dividend royalty, they fall amongst their aristocrats, whatever you might call them. They do fit into that category, and that is what we like to see. We like to see those increases. This helps our payout calendar become a little prettier. Those figures increase a little bit. And people always talk about different ways you can increase the value or the size of your portfolio is obviously through buying stocks, seeing those dividends reinvested or price appreciation, but you can also see your dividends increased so that when they do get paid out, there's a little bit larger of a compound effect there. In this case, with Johnson & Johnson stock, a 6.6% increase in that compounding, essentially, and a 5% increase with Apple. We love to see that, and that's a reason why we buy these companies and not some insane 10-15% dividend yields that just eventually fizzle out into nothing. You can see the dividend income we've been able to acquire over time. This small little dip, I think in here, was when FISROX, the index fund that we do have, kind of got removed. And so the income from that was not factored in. And then the income from SCHD hadn't quite been updated yet. So we see this little lull, but nonetheless, just an absolute rocket ship as we've continued to add to the portfolio, which is why I'm going to leave off on this, a strong note, and something I've literally said almost every single video: continue to add to the portfolio. Something that I will be doing over the course of this week. Even when the market's down 2.15% or 5.33% or 8.56% or 9.63%, I'm going to add. Because over this, let's say last year, you could see the ups and the downs. But if I'm buying here and here and here and here and here and here, I'm getting in at all of the different prices. And over the last 6 months, lowering my cost basis. Over the last month, lowering my cost basis. Over the last 5 days, lowering my cost basis. Which means that I get to pick up dividend increases of 5% at discounts. Dividend increases of 6.6% at discounts. It's the same theme over and over again, and it can get repetitive, and I'll bring in some new topics here and there again on the dividend journey, but this is a real true look at what I'm thinking and just what goes along with purchasing stocks and owning individual companies. Keeping up on their earnings, keeping tabs on them. I'm not going to bore you with all of these different numbers in here, but I did go ahead and read both of these. Obviously, I kept up to date on Apple, and I note the increase of 6.6% on Johnson & Johnson. So we're keeping tabs, but nonetheless, as long as the company's outlook stays the same, they continue to do what they do and do it over the next however long, I'm going to buy the stock because people will consume the company will pay dividends, and they will raise dividends as well. So, with that being said, I hope that you got some entertainment value from this video. I hope that you're able to piece together or gather some type of valuable information. Thank you so much for watching, sticking around, liking, subscribing, and commenting. Go ahead and comment what stocks you think we should add that pay out in January, April, July, and October. The quarterly payers will pay out in that order. I need to get my dividends up within that quarterly schedule. That way I can see my cash flow increase. You can see the measly 24 cents that I receive in those months. I'm hoping to get that up. Thank you so much for watching. Go ahead and hit that like button if you've made it this far. Comment pancakes if you made it this far in the video. And I will talk to you all in the next one. Take care.